Welcome to the Trading Lounge and the day ahead report, and here we're looking at the Dow Jones. It's a daily chart. I don't have the last day here, but it was up and was above the 13,500 here. But the question here is that is this a top of a market here, and would we see a move back down through here, or is it just a small corrective pattern that's occurring across the 13,500 mark there? It can be counted in both ways to give sort of fairness to both counts, but we sort of do see it as a corrective pattern, and further upside new highs would be expected, and that would be the basis of being an A wave, a B wave, and a C wave moving down through here in the 1, 2, 3, 4, 5. However, we need to draw the line in the sand, and the 13,000 is a 500, and we just really need to wait for support, and that's developing, and we'll just see how that tests for support. If it fails the support, well, then we will be looking for further downside to come. But we've had to wait because when we've got this sort of overshoot pattern here, then the distance it goes above will be the distance it goes below, so that's roughly about right. So just we have just had to really wait for it all, and it's been really sort of time consuming, this particular correction here. So let's just see if we get support here. If we get support here, then we can get our next run to the upside. So in looking at that, there's a couple of areas. When we look at the VIX indicator, it's still dropping to the downside, so that would put these sort of, the indices, risk assets, whatever you want to call them, to the upside. So the other point would be looking at the US dollar index, and we'll have a look at that as a moment if it rejects the 80 level there. So in the Dow Jones on the 2-hour chart here, this low that we're looking in through here, we've got a nice move to the upside from last night, and it moved up through the 3,500 here, and it's coming back to test it. Now the question is that are we going to get an impulse wave to the upside here, or are we just going to get the corrective wave here in terms of 3 waves? So are we going to get 3 waves, and that's what we have so far, or are we going to get 4 back to here and 5 up to here? If we get an impulse wave here, 5 waves here, then we'll get a larger ABC, and then we'll get further upside. So 5 waves here will give us the direction of the market, and then we'll see new highs from that point. As it stands at the moment, it's only 3 waves to the upside, and that is corrective. So if it becomes resistance under the 3,500 here and then works lower here, then we can expect another 5 waves like this one here, pasted on over here to the downside, and we'll be looking further back down at 13,200 in that area there. So when we look at the S&P 500 on here, we do see some overlapping wave structures, which does sort of create that ABC pattern here that I'm just sort of displaying here in terms of an A and a B and a C. So it's overlapped here. So being a broader market of 500, S&P 500 compared to the Dow 30, it looks like the mid caps and the lower stocks are sort of dragging it down somewhat. Yeah, so it's giving us a more of an ABC correction here. So it is important. As I mentioned before, if the 144 becomes the retested resistance, then we can go short from that point. If the 1450 becomes the the support, well, then we can go along from that point there, and our bias is to the upside. But when I see these type of corrective patterns here, they are corrective, and they are meeting supply technical resistance through here. Always good to bring triangle patterns through on the trend lines, but the bottom line is it's moving up through to here, and this is the whole sort of where the volume was turned over, so it's really pegging it to the downside. So we need to see if it's got strength to the upside there. One of the things that we can look at and have been looking at is the US dollar index here at 80, and it still hasn't rejected this level as such yet. It moved up and it moved down through it. That's fair enough, but it needs to sort of find that as resistance now and then move down. Now, if it does move to the downside here, then we're going to have our trend to the upside in the euro, in other currencies, and stocks and commodities and so forth. So that's what we're looking for, and it's what we've been waiting for. Right since it's low here, we've just been sort of steadily sort of waiting through here, and it hasn't made very good trading for for trading the local market as such. So we just need that. It's kind of gearing up and getting ready. Let's just see how it pans out in the next session or so. But a nice break lower through here would obviously give us the indication of further upside on indices, commodities, and currencies. The European markets, the DAX is pretty much following the US indices, and the FTSE is kind of doing its own thing in a way, slightly sort of same. It is there in a certain way, but not as sort of clean as the DAX here. The DAX here we're expecting to come down and bounce off the 72, of course, and the next important level through here would be, if you're trading this, would be this 7,072 here. So looking for support on this particular level through here. Now, it does appear that we've got 5 waves down through here, the same as the Dow Jones through here, but I just want to see how it looks, because on the Dow Jones, we can count this as an A and a B wave and a C wave down through to here. So if that's correct, then we'll be looking for support on top of the 73 here, and you go along from that point there. If this becomes the retested resistance here, then then it's resistance from that point there, and the 7272 here would come into play as well as a trigger to enter more short positions in. But we want to basically see a move down here, retest that, fail, and then move down through here and fail the 72 here as well to the downside. But let's just allow this some time here to unfold here, because if we do have 5 waves up through here in terms of this more intraday chart here, then we really need to look at the 61.8 retracement level through here, which is the 72.50 here, the midpoint. So we can allow it to just give it time, because if we do have 5 waves up here, this would be an A wave here, a B wave here, a C wave down to here, and then up from that point. So let's just see how we go with that. We just need to give it some time to give us the setup there. It's falling into play. The FTSE is a slightly different pattern to the DAX and the other plays as well. We've got that nice strong move up through here as well, which can be counted as 5 waves, more so than a corrective wave. Once again, it's had its little sort of overshoot pattern here, so we can expect like an A and a B and a C across here, across the 5/8. But after 3 swings across here, once it's got its first high in 1, 2, and 3, then finding support on here would give you your long trade from that point there. So you just need to allow the first bit to unfold there. But if correct, then that C wave low is in place there. That C wave is all of that move that's been down through here. This would be the B wave going up through there, and the A wave coming down through here from that previous high. So an A, a B, and a C wave to this point here. So support on here on the 5/8 would give us the long trade, but we just need to give it a bit of time to develop support there, so it can confirm that we're actually working from that particular price point, because we need to know the exact price that we're working from and that's been tested and so forth. The Australian market as well, yesterday, just in the bigger picture here, we are expecting it to the upside, and now that it's got support on the, well, it hasn't got support yet, but if it can develop support on the 4,400, then that's the next trigger to the upside. Because if we just drill in here for a moment, as we have been, we were looking for this move coming down through here's the ABC correction, and then on the Friday we were looking for, we had 5 little waves coming to the upside here, and that's proved correct in terms of the 1, the 2, the 3, the 4, the 4 to here, the 5 to here, because if in the third wave here, I realised that there was 5 waves in here, the 1, the 2, the 3, the 4, and the 5 for the third wave, the fourth wave and the fifth wave here. Pulling back 61.8% into this area here was correct. And now we're seeing a push to a move to the upside there. So we should continue to see more upside here, but we want to see the cash market finding support on the 4,400, and that will take a little bit of time for the cash market to actually develop support on through here. And once again, it's also a line in the sand for the cash market as well, because in essence we do have this is a three-wave structure to the upside in terms of up for 1, back for 2, and up for 3. So we could see the 4 and the 5. That's what we're expecting, but we also need to note that it is a three-wave move to the upside, and that's what we need to have a look on the actual cash market once that finishes trading as well. So once again, a day or two to develop support or not on the 4,400 here. We went long yesterday. That seemed to be correct, with a bit of follow through today on the US markets and here as well, due to manufacturing figures being more positive than expected. And China's still on holiday. And let's have a look at the commodities. Just looking at oil here in the bigger picture first, we're still in the larger triangle pattern that we're working through here, just to bring you in the picture a little bit. This quite nice triangle actually, the A here, the B, the C, the D here, and now we're moving into the E wave here, which will also be in smaller A, B and C here. The A wave here is completed now, so we'll be in the B wave here. So inside the B wave there will be, a B wave is always 3 waves, so there'll be a smaller A, B, C in that structure there. So we were looking at that now, so let's have a quick look at that. So in the E wave first, we were looking at the E wave coming down through here. So we've got the A wave down here in 5 waves down. We'll be looking for the A, the B and the C wave here for the B wave here, and then the C wave down here to finish the E wave through to here. So that's what we're looking for here. We understood yesterday that, or the other day, that any move up from here would be the supply level and also the top of group 1 as well, 93, and that's being hit now. So that would create the B wave through here. The B wave normally pulls back 61.8% of the A wave or thereabouts, and also the B wave would be in 3 smaller waves as well. Once that's complete, we can look for support on the 93 here, and looking at 5 waves in structure moving up through to here to test this supply area up through here. I've got it at 95 here, but it could move higher through here into 96 as well. So we'll just sort of see how that goes through there. But yeah, look, in terms of trading, we've got basically 5 waves up here for the A wave. We'll be looking for the B wave to pull back, so it could test the 90 again, or just down to the 91 before it makes headways to the upside. So that will depend on a few aspects, and one of them being the US dollar as well. The copper market here is doing pretty much as expected. The pattern here is the same as the gold market, the same as precious metals, base metals. So we're looking at wave 4 being in place here now. I'm still a little bit sort of reluctant to call that wave 4 in there until we see the US dollar index push to the lower side. And yeah, and also this wave 4 may be a little bit small, but it does complete down to the 38.2 retracement level, which is fine. It's fine as a structure and moving down to this point here, yet we just need to see it. But anyway, as I mentioned before, it's not like this market's going to run off anywhere strongly, because we've always expected it to edge higher above the 380 here for wave 5 of 3, and then another wave 4 to here, wave 4 in single brackets to here. So, there's still a lot of work to be done at the 380 here before we see any further upside there. The gold market as such has, just looking at it here for a moment, it's finished its ABC correction down to here. So, and we've basically been watching it move to the upside now. Now you can see that the group 2 here has really held the price here quite nicely. So this has been a resistance area. When the price starts dealing with the number 8 here, it's a profit taking number. It's going to have trouble here, but this block of price action here comes with volume, so that will play a nice supporting role as this market moves up and down through here. So that's something to look out for there. In terms of bigger picture there, excuse me. So there's a couple of ways to count this to the upside, but I'll just stay with this one here because on the other charts it can be explored in that way as well. So we're looking at the 1, 2, 3, 4 here, and we're looking for the fifth wave up through here. So we'll be looking at some sort of ABC correction back into here, and it could pull back the 61.8% of this move through here. That will depend on what the US dollar index does, but you can expect it to come back, test this low here or this low through here. The 1772 is a strong number, as you can see through here, so it's holding up sort of well there. But just allow it to to unfold into this space here, and a move down through here is quite handy actually. If it does move down and then get support back up through there, then it's ready to go at that stage. So always a test lower, then look for the number that you need to work from there. Okay, let's have a look at currencies, because the RBA today will be changing rates or not. Okay, just looking at the US dollar index again. So our preference is that this is a wave 4 that we're looking at through here, and looking at this to be completed either now or very shortly, in terms of seeing another fifth wave to the downside. So as this moves to the downside here to complete this another wave down through here, then we'll see the other currencies and indices push up. So it's taken a while for this to occur, obviously, and it just needs more time. So what we're sort of looking at through here closely is that we're looking for the retest at the 80 here, and if it fails, then we want to see it taking out this low here, and we want to see this whole region here, the SG2 here, as resistance through here, and then that will give us the bias to the downside. If support is found on top here, then we're going to see those indices push to the downside as well. So it is a critical point here, but as we have been, we've just been waiting for this to unfold through here, and anything can happen, but that's why it's important to wait for this level to become the support or the resistance at this stage here. If this market moves back up through, it would have to move back up as a wave 4 here. It would have to move back up into above 81 here to take this area here out to prove that it's not a wave 4. So there is a fair bit of space for it to move into. But however, let's just see how it dances at this 80 here to see if we're on track here. So, but anyway, we just still need to watch that particular point there. The euro. Okay, we've got the bigger picture here again. So this is once again a large triangle pattern that we've been looking for here, but in terms of an A wave. So the B wave is the triangle through here, and in terms of the A, the B, the C, the D, and the E wave coming up through here. So we are looking for an A wave to here, a B wave to here, and a C wave up to here before we see any move to the downside. So this move up through here so far, we're counting that as wave 3 high up here. So let's just have a look in through here. So that move up from this particular low down here, the D wave, we're looking at 5 waves to move up through here. So we're still in wave 4 here, just like the US dollar index pulling back, and this is done quite nicely through here so far because it's at the 38.2 retracement level, equal swing on each side here, perhaps a little bit more down here, but splitting hair, so it doesn't really matter, but it's taking shape. So what we need to see now is we really need to see this push to the upside through here. And it sort of started too. So if we have a little look at that move here, this is on the 15-minute chart here, we can see that we've got this move up from that particular low point from here. So we had our little 5 waves here that we were chasing, so that's there, and we're looking for 5 waves up. So it appears that we've got a little 5-wave structure to the upside. So a 61.8, 50, 60% retracement level comes into this sort of area through here. But we could also see it as a bit of a classic trading levels pattern across here as well. So we do seem to have 5 waves down through here, as you can see. So that would be like an A wave, so there'd be a B wave and a C wave here before we see any further upside here. So swing 1, 2 and 3, and then finding support and then moving up from there. That's what we'd be looking for there. The Australian market, we've got rates coming out today, so that's obviously going to govern the market, as it has been really holding it quite steady over the last week here. So we can have a low in through here as well. And this will move up through here. We've got like a little 5-wave structure through there. So let's just have a little look at that. It hasn't moved as much as the euro, but we've got the 1, the 2, the 3, the 4 and the 5 here. So we'll be looking at an A and some sort of B wave here and a C wave here, and then looking for further upside here. But of course, intraday, you're going to see some spikes in there. My opinion on the rates being changed or not, it's just a guessing game, so I can't really say. But I know that they won't change if they don't have to, and obviously all the indicators, the inflation indicators, so all in the band. So there's no real need to change. But that said, anything can come out of the gate. So it's really important to make sure that you have all your contingent orders sitting in the market, so you're covered, so you know your risk before you take the bet coming out of it there. But as it stands, it does appear that we've got this little 5-wave structure here. So more corrective patterns here in the morning session, and then we'll be looking for another move to the upside there. But don't count on that. That's it's best. My suggestion is stand aside while this plays out. Now, that all said, finding the 104 as support, so if it did move up through here and come back and test it, and we've got support on that, then we can look to the upside from that point there. Otherwise, if this low gets taken out through here, then there's obviously more downside to come, and we'll be looking down at the 102.72 area at that stage there. Alrighty, well, good morning and good luck.